Ladies and gentlemen, good day and welcome to Tolins Tyre Limited Q2 and H1FY26 results call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. We have with us today Dr. K.V. Tolin, Chairman and Managing Director, Mr. Sojan C.S., Chief Financial Officer, and Mr. Cyrus Tolin, Head of the Operations. Before we get started, I would like to point out that some statements made or discussed on today's call may be forward-looking in nature and must be viewed in conjunction with risks and uncertainties that we face. The company does not undertake to update these forward-looking statements publicly. Now, I request Dr. K.V. Tolins to take us through the opening remarks. Thank you, and over to you, sir.
Thank you, and good afternoon to all our esteemed participants. I welcome you to the earnings conference call of Tolins Tyre Limited for the second quarter and half year ended 30th September 2025. It's my privilege to address you today. Joining me on the call, our Chief Finance Officer, Mr. Sojan C.S., and our Head of Operations, Mr. Cyrus Tolin, along with our Investor Relations team from Adtractors PR. The first half of FY26 has been a period that demonstrated our resilience, operational strength, and strategic progress. While Q2 witnessed temporary softness due to the anticipated GST revision, our overall H1 performance underscores the strength of our diversified business model and the relevance of our product portfolio across segments. The tire industry continues to remain structurally healthy and supported by improving freight movement with strong momentum in the replacement market. Rising agricultural activity and steady demand from the rural and semi-rural regions. Despite the Q2 impact, underlying market fundamentals remain robust. A key external factor influencing Q2 was the GST-related purchase deferment. Dealers, distributors, OEM partners, and fleet operators consciously postponed buying decisions of PCTR in anticipation of the tax revision. This moderation was purely a case of demand postponement, not demand contraction. And we are already witnessing improved inquiry trends and a clear revival in order flows as we progress into Q3. With this transient phase behind us, we expect normalized volumes in the coming quarters. One of the significant developments for the industry and for Tolins has been GST Council's rationalization of rates. The reduction of GST of new tires from 28% to 18%, and tractor and farm tires from 18 to 5% marks a transformative step for the sector. This timely reform will meaningfully improve affordability, support channel confidence, and stimulate demand in both replacement and agricultural segments. We believe this will act as a strong tailwind for the industry in H2, FY26, and FY27. Now, we are strengthening our product portfolio with the launch of new tractor rear tires, engineered to deliver superior durability and traction. This category is receiving encouraging feedback, and contributions are expected to pick up meaningfully from Q3 onwards. Alongside this, we expanded our institutional client base, increased presence in the rural and semi-rural geographies, These developments have further diversified our revenue base and strengthened our growth visibility. Our retrading and PCTR segment saw a temporary slowing in Q2. Volumes in this segment saw a dip as customers were waiting to see the GST changes. We continue to prioritize compound innovations, formulation improvements to strengthen our position in this space. Operationally, we made strong progress under the leadership of Mr. Cyrus Tolins. Manufacturing efficiencies improved through targeted process optimization, controlled overheads, and enhanced digital visibility across plants. These steps have strengthened our operating structure and helped mitigate the temporary impact of lower volumes in Q2. They also position us well to leverage expected demand normalization in H2. Looking ahead, we remain optimistic about the second half of the year. With GST clarity now in place, pricing replacement demand, contribution from newly launched products, and a healthy export pipeline, we expect stronger performance in the coming quarters. The improving industry backdrop combined with our internal efficiencies gives us confidence in delivering higher revenue, better margins, and stronger profitability in H2 FY26. I would like to take this opportunity to thank our employees, channel partners, customers, suppliers, banking partners, and stakeholders for their continued trust and support. With this, I will now hand over the call to our CFO, Mr. Sojan CS, who will take you through the financial performance for the quarter and the half year. Thank you.
Thank you, sir. Good afternoon, everyone. Let me take you through the financial performance of Tolins Tyres for quarter 2 and half year FY26. For the first half of FY26, revenue from operations stood at 155.8 crores compared to 153.2 crores in H1 FY25, reflecting a steady growth of around 2% despite the temporary slowdown in quarter 2 due to the GST-related deferment. Our performance in H1 underscores the strength of our diversified portfolio across retreading materials and new tires. EBITDA, excluding other income of H1, stood at 22.35 crores compared to 30.03 crores last year. The decline reflects margin pressure due to lower volume in Q2, along with certain fixed cost absorptions. EBITDA margin for H1 stood at 14.3%. Profit after tax for the first half was 16.22 crores compared to 18.51 crores in the previous year. Despite the softer quarter, PAT margins remained stable around 10.4%, demonstrating strong cost discipline and operational efficiency. Earnings per share for H1 stood at 4.16 rupees. Coming to the quarterly performance, Q2 was impacted by the temporary deferral of purchase decisions among the dealer network due to the GST revision. Revenue for Q2 stood at 66.1 crores compared to 76.9 crores in Q2 FY25. EBITDA for the quarter was 8.91 crores compared to 15 crores in the same period last year. EBITDA margin for Q2 stood at 13.5%. Profit after tax for the quarter was 6.92 crores against 9.6 crores in Q2 previous year. Despite moderation in revenue, PAT margins remains steady around 10%, supported by efficient cost management and prudent overhead control. On the balance sheet front, our financial position remains strong and comfortable. Raw material prices, including natural rubber and crude-based products, have remained largely stable, and this will support margin improvement in the coming quarters. We also expect operating leverage benefits to play out as volumes normalize and the new product categories are being to scale. Looking ahead, we anticipate healthy improvement in demand supported by the GST-led affordability, recovery in replacement and agricultural segments, and continued traction in export markets. We expect the second half to deliver strong revenue, better volume, and margin recovery. The company remains committed to disciplined capital allocation, operational efficiency, and sustainable long-term value creation. With this, I conclude the financial review, and we are happy to take your question. Thank you all.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. We will wait for a moment while the question queue assembles. The first question comes from the line of Keshav Garg from Counter Cyclical PMS. Please go ahead.
So, Mr. Tolin, the numbers are really disappointing, and I remember that in the Arihant call in September, and you mentioned that I specifically asked you that due to the GST reduction on tires, are we seeing any sales deferment? And you mentioned that there is no sales deferment whatsoever because the demand-supply balance is currently in favor of the manufacturers and suppliers. And now you are saying that our sales are down because of GST. And if you see your own presentation of page number 10, then the fall is basically coming not from the tires but from the retreading part. So I don't understand what's the actual reason for such bad numbers.
Okay. Thank you for your question. Actually, the tire segment has grown, but we got a setback on the GST because GST everyone was expecting there is a GST cut. There will be a GST cut to 5% from 18% on the PCTR area. So for that only we have from August 15th onwards we have slowed down. There was a big slowdown around 20%, more than 20% slowdown in the PCTR segment. That only has created this shortfall in the revenues. Not on the tires.
So in the retreading segment, has there been any change in GST taxation?
No. Everyone was anticipating. That is why they kept on hold. But there is no change.
Somehow in the Arihant call, no mention was made of this, that people are postponing, and now it seems like an afterthought. In any case, now Mr. Tolin, going forward for FY26, what is the realistic expectation for top line as well as for margins for the remaining year and for the full year?
So we see this GST impact. We were never calculated this kind of a shortfall will come like that. See, we have a solid plan of minimum growth of 10%. So these kind of factors, when expected factors are coming in, that is why these changes are there. Even nobody has control on these kind of factors now. So that was the reason.
So basically, we should end the year around 330 crore top line.
See, that is the minimum expectation. We should grow because now this Q3 is doing very, very good.
Okay, and what about the margins?
Margins also, we don't want to compromise on our whatever business we undertake are all good margins. Even if you look at the tractor rear tires which we are entering, is also a very profitable, very high margin area. That is why we have chosen those areas. So the margins also will not be compromised from the previous years.
So basically,
even if you look, even the top lines have reduced, the margins are still intact.
No, I mean, in the second quarter, the margins have come down to 13.5%, and you are very confident about 20% margin.
So if it's a consolidated, we have that margin, no?
No, I'm talking about consolidated only. For the second quarter, standalone margin is 7%, consolidated margin is 13.5%.
Yeah.
We did 9 crore EBITDA on 66 crore consolidated revenue. So it is 13.5% margin as compared to the 20% margin which you were extremely confident that we will maintain.
Yeah, but see, even though when compared to our peers, we have maintained a comfortable margins. In the
coming quarters, this PCTR segment will recover whatever we were short of in Q2. Plus these additional revenues from agricultural tires, tractor tires, plus this we have got one order from Tamil Nadu State Transport for supply. It's a good margin business. So that those things will contribute to to stabilize the margin in the next half. Second half.
Again, this also the 40-50 crore from state government. Earlier you said that we don't participate in that government business because it is not
low margin. Yeah, but this one has come in a higher margin. See, when there is a higher margin business, we don't jump into lower margin business. We have taken up this with a higher margin.
Right, Mr. Tolin, best of luck, and I hope the numbers improve going forward. To the best of my memory, the last time I heard you were mentioning 20% revenue growth with 20% margin, which now has come down to 10%. I hope it does not fall further.
Yeah.
Thank you very much.
Yeah. Thank you.
Thank you. The next question is from the line of Vijay Pandey from Nuvama. Please go ahead.
Hi, sir. Thank you for taking my question. Just on the previous question of Keshav, so how are you seeing it now? From 22nd September, the GST rate cut has been formally announced. So it has been around 2 months' time. How are you seeing the sales now as compared to probably sequentially or YOY? Has there been any improvement? Should we expect the 20% growth? So is it fair to assume that there will be a 20% growth YOY when we see over at least last 2 months?
Our Prime Minister has announced this GST cut on 15th of August. From there onwards, there was a slowdown in buying. So everyone was expecting the GST cut. That is why this slowdown was happened. Almost 45 days. There was around on 27th after when the GST really when it was implemented only then on 27th September. Then only the sales resumed. Otherwise, they were buying only for their minimum requirement. Nobody was taking in the larger volumes.
I'm talking about post from 20.
Yeah, post-COVID, everything is fine. In my speech, I mentioned that. No, it is everything back to normal and now very good volumes. Everything has resumed to the normal way.
So, are we seeing any escalation because there was no sales or less sales in previous 1 month?
Yeah,
so
but that was a temporary phenomenon and it has now normalized and the buying are very good. People are buying, see what we were expecting as per the normal volumes.
Okay. Secondly, sir, what is our sales from the rubber compound business? So outside PCTR and tires.
Can you come back again?
The rubber compound business, the bonding gum, vulcanizing, what will be our sales from there?
bonding amount, or you have the data and the bonding amount.
It will come around to 7% of 7.
So it will be almost 7% of the total procured sales.
7% of total
PCTR
PCTR sales.
Okay.
Treated segment.
Okay. And so, in the terms of the agri and tractor tires and that Tamil Nadu State Corporation on the order which we have received, can you give a little bit of idea what the size of the order in terms of...
it will work around 50 crores, that order, on an annual basis. You have all the documents we have on the website, if I'm not wrong.
So that 50 crores is for agriculture business.
PCTR, no, PCTR.
And from the agriculture business, how much we are expecting?
The agricultural tires, we are expecting something like 10 crores business in this, the total from our existing line, and we will be adding something like 3 to 4 crores from the new tractor rear tires.
So overall, in terms of annual run rate, it will be 15 crores.
Yeah, in the next year, for the next 6 months.
Okay. And lastly, sir, if you can may just give a brief update about the Apollo offtake agreement. How is it progressing?
It's good to see this PCTR sales of all the companies, not only ours. If you look at other peers who are making in PCTR, all the volumes have dropped in this GST issue. So everyone is picking up the volumes this month and all. They are all are coming back to normal. So everything is now in the normal way. So Apollo business is also continuing. They are also very happy about the business. We have a contract with Apollo, so that I cannot give more details about the Apollo business. But it has not yet turned into a top line business that we are working with Apollo, still continuing on a job work basis kind of thing.
So it's still a contract manufacturing. It's not
still not contract. So we are expecting some volumes will come to on a top line basis, maybe this month itself. So our team, both the technical teams are on the dialogues for those things.
And any what can be the revenue from that business currently in the second quarter?
Second quarter will be something like 2 to 3 crores.
Okay. Okay, sir.
Okay. Thank you.
Thank you. The next question is from the line of Shrishti Agarwal from Step Trade Capital. Please go ahead.
Hello, sir. Am I audible?
Yeah, you are. Please go ahead.
Yeah. So my first question was regarding the GST demand. So are you expecting the demand to be regulate from the next quarters, or will it take some time for the demand to go back?
No, it's already back to normal, and we are doing good volumes. It's back to normal. It was a temporary phenomenon in the last quarter, so that is over. After the GST regime was, this new GST rates were announced, and it came into that was enforced, that it was all back to normal.
Okay, and your agricultural tire segment, it will you will get revenue, start getting realizing revenue from quarter 3 or Q4.
Q3 itself we are expecting, because already everything is set. Next month onwards we are starting the sales. Then we have to see in the Q3 onwards, Q4 onwards, the real numbers will start climbing.
Okay. And you just mentioned that there's a drop in volume, but you have maintained your profit margin. But if we see on an EBITDA level, your EBITDA level has dropped quite drastically from 19 to 20% to 13.5%. It dropped in last quarter also, and it dropped this quarter also. Is there a specific reason?
That is mainly due to this volatile raw material prices in the last 2 quarters.
Sorry, can you repeat that?
raw material prices were on upward trend during this quarter. Rubber, everything.
Okay. Okay, that's it from my side. Thank you.
Thank you. The next question is from the line of Nimish Pandya, an individual investor. Please go ahead.
Hello, sir. Am I audible to you?
Yeah, please go ahead.
Yes, so I have 3 questions, sir. So my first question is, sir, what are the major strategic priorities for Tolins Tyre over the next 12 to 18 months? Can you shed some light on this?
Already, I have explained in my speech, we have added too many new product lines like the tractor rears that will be a driving force. Also, our exports from UAE also is picking up to US and all, because US, we don't have, UAE doesn't have much bigger tariffs. So that also can be an additional driving force in the coming months to grow. So we are positioning ourselves in the two-wheeler segment. That growth also is coming in. The last quarter, even though we had a small softening on the PCTR area, the tires the growth were consistent. So also our new project on the recycling Terra rubber, that also is taking shape. In that also will get commissioned by December and or maybe in the first of January, in the month of January itself. So these are the drivers that will be taking the company forward in the coming months and the coming financial year also.
Got it, sir. So my next question is, how confident is the management about delivering stronger revenue or we can say margin recovery and profitability in H2 FY26?
Our company, we are into this business for the last 43 years. There are always some ups and downs in the market due to these kind of unforeseen situations. So we are we have always been very successful in striding all those challenges, situations. And that is what has happened after the September 30th. Now in this quarter, we are seeing extremely good performance. And I think that will continue for time being. And we don't see any big challenges. And the experience what we have over this years in this industry can take very well forward, take the company forward in this kind of challenging situations.
Got it, sir. Sir, that answers my questions. Thank you.
Thank you.
Thank you. The next question is from the line of Keshav Garg from Countercyclical PMS. Please go ahead.
Sir, I can see that our employee expense has doubled year on year from 2 crore to 4 crore despite the fall in revenues. So what is the reason for the same?
See, in the first quarter, we have seen very exponential growth in the companies, and that is why we have to add some skilled laborers, very skilled laborers. But now what we are trying to do is we are trying to cut down. Now we increased the production with the adding of the new laborers. Now what we are doing, we are retaining some skilled laborers and trying to do a lot of automation also. So that is also going side by side. So even though you can see in the coming years, with the same kind of manpower cost, we will be doing much bigger volumes. That is how we are going to go through in the coming years.
Right. And how is the UAE business doing?
UAE also has got some addition. We started some US exports also this month from our UAE factory, because UAE has only 10% tariff to US. So that has been a good opportunity for us, because we have the only manufacturing unit in the UAE for this tire retaining materials. So we are utilizing this as this situation. We are utilizing that capacity over there. You know that the capacity is very much underutilized. So we are utilizing that capacity over there in this situation.
So, Mr. Tolin, even if we take your reasoning at face value that due to GST issues, we could not, basically sales got deferred. So, whatever our customers didn't buy in second quarter, they would have bought in the third quarter. So, for the whole year, why the guidance reduced from 20% to 10%?
I didn't get you once again.
See, even if we take your reasoning for poor performance in second quarter at face value, that due to GST related issues, our revenues got deferred. So in the third quarter, they would have normalized. So for the full year, why has guidance come down? I mean, if sales shift from second quarter to third quarter, I mean, the full year sales should not, what's the change in the full year? It's not
we never told about full year change. No, we are still saying that we will be performing as per our guided numbers. But we have indicated in the initial stage. Only there is a small drop in the Q2 in the PCTR area only, not in the tire event. So we will now with this additional business what we have got from this Tamil Nadu STU, we will perform as per our expectations, and there is no challenge in the margins also. This business what we have from Tamil Nadu STU is not a low margin business. It's a fairly very good margin business. So there is no challenge in the PAT margins either.
So in this Tamil Nadu order, we'll make 20% margin?
Sir, these are all net to you. We cannot say net to no. We can only give some guidances. It's not a low margin business. The margins in the previous year also will be continuing. That is what I can give you a guidance like.
Okay, now, Mr. Tolin, so this 50 crore order, 40 to 50 crore order, it is executable within what time period?
It's 1 year.
In FY26 or the next 1 year?
1 year. 1 year. Next 1 year, half of it will cover in this financial year.
Okay. Right, Mr. Tolin, thank you very much.
Thank you, Mr. Kashyap.
Okay.
Thank you. The next question is from the line of Prateek Srivastava, an individual investor. Please go ahead.
Yeah. Hello, sir. Can you hear me?
Little more louder.
Yeah, sir. Sir, I again want to come because it is very confusing conference call. Are you still guiding for 20% top line growth with 20% margins overall? Or are you reducing the guidance overall? I'm getting very confused.
So we never talked about 20% top line. We were committed with our expectations are minimum 10% on the top line. That is what our
the other person was saying in the Arihant conference. Sir, the other person is saying in the Arihant conference you gave 20% top line growth for this year.
I don't recollect that, but then I am not disputing it. But always we are maintaining the same, that we will be performing 10% more. That is the industry standard. So we will be performing better than the industry standard. That is our guidelines. That is our targets. Okay.
Got it. We'll do a back check on that. Now coming back to you are saying that post GST cut, every business is normal, business is good, but I want you to quantify this, sir. What do you mean better? What do you mean good? Are you, and tell me, explain it in terms of volume growth. So are you saying the volume growth, what is the volume growth so far? For now, I don't want numbers. You can, I think, at least tell us, give the guidance on the volume growth post the GST cut.
See, whatever we were doing in the first quarter, that volumes have been, volumes are now come back to normal. That kind of a volumes are now.
Okay. So, because I don't have the number handy, but maybe someone can check.
Yeah, please, everything is available, so you can just go back and check. That is, see, whatever we had in the Q1, it is not.
Someone in the call can check, but okay, so you are saying the volume growth are back to Q1?
Yeah.
Okay, all right. Thank you.
Thank you, sir. Thank you.
Does that answer your question, Mr. Prateek?
Yes, it does. Thank you.
Okay. Thank you. The next question is from the line of Vijay Pandey from Nuvama Wealth. Please go ahead.
Sir, I just wanted to check on the same part that in terms of if I have to think about Q3, what should we expect in terms of Q3? Because it's almost half of the Q3 is almost done. So how are you looking right now at Q3?
Q3, we are back to what we were in the Q1 positions. So the volumes have picked up and it is normalized. So everything is back to normal now. There was a drop in the Q2 after 15th of October, of August. Then that is no more there. That slowdown is no more there. And with that, additionally, we have got some business from Tamil Nadu also. So that also we started supplies. So this sales also will add upon that. So going forward, any challenges coming ahead, we don't know. But as of now, the Q1 volumes are already there.
Okay. And also, sir, how is the raw material prices looking right now?
All softening. So we should come because nobody has come up with a price reduction in the market and all because already there was a GST cut. So none of the companies have come with a rate cut. Even the rates are softening. You can see all the rates are softening.
Okay.
Thank you, sir.
Oh.
Thank you. The next question is from the line of Srishti Agarwal from Step Trade Capital. Please go ahead.
So you said that you never mentioned the 20% growth, but you just said that you will have growth above industry standard. But I don't know about the Aryan call, but if you see the transcript for your May 2025 call, you have clearly mentioned that we have a conservative look at about 20% CAGR or 20 to 25% CAGR for FY 2026. And now you are saying that we have never mentioned it, and you are saying that it is up to 10%. So I don't know what this is about.
Say 10% is the minimum growth that we already having in our targets. But we are performing better now with a softened reduced Q2 numbers. I'm not boasting on that 20% or something like that immediately, but 10% immediately we have the orders in hand, so that we have committed. But things will gather up because our tractor, rear tires, everything is coming into the market next month. So all these put together, we will perform better than what we have committed. That is what we can say.
But GST cut did have an impact in that. If you are saying that
GST cut took our
10% now.
Yeah, took around 45 days business has been put on a hold kind of thing in the PCTR area. There is around 25% drop in that business. But now we have to gear up and get those numbers back in our kitty. So that in this quarter and next quarter, we will try to augment that and come to the numbers what we need.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Deepak Juneja, an individual investor. Please go ahead.
So my question is regarding the competition in the market. I'm not looking for figures, but how do you see, sir, our pricing, compared to the competition? Thank you.
Sir, we are very well placed. Our pickup of our material, everything is fine. Even though there was little softening in the raw material prices, none of the companies have reduced the prices. So we are also holding. There are some good volumes coming in at a good margins. So things are happily moving. Dealers are happy. So at present, there is no challenges we foresee in this competition race, because there is a healthy and very robust demand in the market as of now. That is what I am seeing in present entire segment. Hello.
Yeah, does that answer your question? Hello?
Yeah. You had my answer?
Mr. Aniket?
Hello?
So the current... Hello?
Am I audible?
Yes, sir. Please go ahead.
Hello, am I audible?
Yes, sir, you are.
Yeah, so sir, I have few questions. As our revenue declined, and you are saying it is because of anticipated GST revision, people or customer are not purchasing the tires. This is what you are trying to say, right?
Not on tires, on PCTR.
Sorry, sir?
On retreading material, PCTR.
Okay. So, are you seeing the demand in the Q3 and Q4?
Yeah, that is very well told. No, you are on the line. We have explained this in detail, this question.
So actually, I don't know why.
Actually, that drop is no more there. Whatever drop was there from August to September, that is no more there. It is all bounced back, and we are now running in the normal way.
Okay. And sir,
Thank you.
this happening. So sir, this shift in the changes, this shift is in the retrading or the normal tires? I mean, the people are more focusing on retrading tires.
See, retrading also is going in the same momentum what we were doing earlier. Only the drop was there in the mid period where the people were expecting the GST. After that, both the segments are doing fairly well, and it was better than it was previously. As on date.
Okay. Got it. Thank you, sir. This is so much.
Thank you.
Thank you. The next question is from the line of Jitendra Nahar from 7 Sequence LLP. Please go ahead.
Can you please quantify or detail on the stickiness of your customers in PCTR segment?
Stickiness, I think there is no turnout.
Yeah, please.
There is no much of turnout. The people, see, we are very proud to say that we have dealers who are working with us for 3 generations, for the last 40 years or so. So, there is no that kind of a turn down from the dealer list or customer list in the PCTR area. People are with us for long times.
Okay. Also, just to reaffirm what you earlier said, that whoever deferred their purchase in Q2 on account of GST, if there is a stickiness of your dealers or of your customers, then that demand should ideally be with you in Q3.
Yeah. That is there. It is all bounced back, and we are doing very healthy, very strong demand. The demand is there as you have seen in the Q1. Things are happening very good as of now. There is nobody has left us due to this situation. It is not, the drop has not happened because the people have left us. So they have just kept the purchase on hold because, the retrading is a very price-sensitive industry. So people just kept on hold for a few days. They all expected that this will come down from 18 to 5%, but nothing happened. It is still down 18%.
Okay. And so secondly, on this new order which you received from Tamil Nadu State Government Transport Agency, shouldn't it be adding to your overall revenue, I mean incremental revenue, because I think this was not there in your earlier guidance, be it 10% or 20%. Shouldn't it be incremental?
Sir, it is not. There will be an incremental thing, but this was already in our mind. We have quoted this tender around 18 months before. It was always there, but we cannot take a hold on that this will come to us like that, because there were a lot of challenges in getting this order placed on us. So we had little bit legal battle, everything was going on. So we never informed this to the market, because once we have the order in hand only, we have to communicate. So this also, we were counting this order also in the numbers, but this is an incremental. Always there is a part of this will be an incremental sales for our top line.
Okay, sir, and one last question, and forgive me if my facts are not correct. One, you recently incorporated a subsidiary which was something to do with rubber recycling. Can you please tell us as to what are your plans there? What is the investments requirement in there? And are you going to get any incremental EBITDA benefit out of that?
Sir, this will come in the next financial year. There will be what we are immediately doing. We are starting with a low capacity, low investment, kind of just 2 crores of capital investment coming into this Terra rubber. It's going to be a recycling of, we are now having around 3 to 5% of scrap coming out of our production. That scrap, because of the high quality scrap, the high quality products what we are making, the scrap quality also is very high. So that scrap we are recycling in this factory and we will be adding back to our product itself without compromising on the quality of our prime products. So this will be, this 5% will straight away, it can come to add benefit our PAT margins in our original products.
Sorry, sir. Sorry. I mean, your voice broke. So your voice was not audible for a moment. Can you please repeat what the last sentence?
So this will, this scrap reduction or reusing the scrap, it will reduce our cost and it will add on our profit also.
Okay. Can you quantify this in terms of overall benefit, or you are unable to do it as of now?
So as of now, we have seen one side we are trying to reduce our scrap in the factory. So then whatever scrap we are producing, that scrap we want to recycle and reuse in our products. This is the plan. So the quantifying, I think at this stage will be too early to do.
Okay. And
once we have the plan, the pilot run is over and we'll assess and we can come back with the volume numbers and all.
Okay, sir. And sir, what do you attribute the reasons for EBITDA reduction? It cannot be just the top line deferment, revenue deferment in Q2, because your overall capacity utilizations are increasing from last 3-4 quarters, but the EBITDA is going down.
See, the Q1 utilization has gone up, but Q2 it is not about the utilization. Then the raw material price has little bit gone up, and that is coming down. It is coming down if that prices are softening now. In the third quarter, it is softening.
Okay. And how do you see the raw material price movement going forward?
Going forward, it's softening, but to protect our margins, we have to see the competition in the market, how it is going to bundle up in the coming days. Prices are coming down.
Hello?
The raw material prices are coming down.
Okay. Thank you.
Does that answer your question?
Yeah, thank you.
Thank you. The last question for today's conference call comes from the line of Keshav Garg from Countercyclical PMS.
Sir, so wanted to understand firstly from UAE subsidiary, what are we exporting to US, tires or reclaim or tread rubber?
Tread rubber, sir.
Okay, so in UAE we don't have tire manufacturing, only tread rubber.
Only tread rubber, only tread.
Right.
Sir, wanted to understand the realization of tires has reduced from 2,400 rupees per unit to 1,540 rupees per unit. So why is that?
The price, come back again.
Sir, the realizations for tire have reduced from 2,400 rupees per unit in Q1 of FY26 to 1,500.
Okay. See, tires, you cannot you cannot take that number into consideration, because then the tires what we produce, there are 3 categories of tires now. LCV, light truck tires, which the weight is high, then the 2-wheeler and 3-wheeler, and then the agricultural tires. So the unit number and cost you cannot see, whatever, all these numbers are same. Costs are different. Got the point now?
Sir, so now when you say that in the third quarter sales have normalized to first quarter, so basically in first quarter we did roughly 90 crore revenue. So will we see closer to 90 crore revenue, or you mean that it has normalized as per last year's Q3, which was 70 crore revenue? So what does exactly normalize mean?
So can you just, what was your question?
Sir, like you alluded to that after this GST-related disruption in second quarter, in third quarter sales have normalized to first quarter levels. So
yeah, first quarter level. Yeah.
We did
that is what I said.
revenue.
That is I said the first quarter revenue, yeah.
Okay, so the revenue in third quarter should be closer to 90 crore and not closer to 70 crore that we did in last year third quarter, which was 70 crore revenue. So when you say revenue is normalized in third quarter, they have normalized to first quarter levels and not normalized to the same revenue of 70 crore that we did last year third quarter.
Correct.
Okay, sir. Thank you very much, sir. And sir, lastly, I just want to wish you best of luck. And sir, you see, all minority shareholders are making huge losses on IPO price. Sir, so I hope the performance of company improves going ahead.
Correct. The IPO, after IPO, September, the entire market is like that. We are also waiting for a good time to come. So we wish all the best of luck for all our investors also. We are trying our level best to perform even better. But some unfortunate things which are out of hand only driving us out of the race. So anyway, don't look at this as short-term thing. As a long-term, we have positioned in a very solid foundation. Even all the expertise we have for the last 4 decades, all we are counting on these challenging times. Thank you for understanding us. Thank you.
Thank you, sir. Thank you.
Thank you.
Okay. Bye.
Thank you. In the interest of time, that was the last question for today's conference call. We now conclude the call. On behalf of Tolins Tyre Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you all.
Thank you. Bye.